Bless Squad, what's going on with y'all, man? It's your boy, Blessed Applesauce, here to bless y'all with another video here on Blessed to Invest. And today, as you can see from the title, we are here to talk about avoiding false breakouts. In trading, breakouts are the most popular strategy out there, but a lot of people have problems with them because they say, oh, they don't work, they're not effective, I can't make any money off of breakouts. And a lot of times it's not because you're trading breakouts or you think that's your strategy you want to stick with. A lot of times it's because you're trading the wrong breakouts. You're not trading them well, and you keep getting caught in the false breakouts. So before we get into it, spam a like on this video, spam the like button, and also sub down below for more content like this, because if you want to get over this hump of the profitability, you're going to need to watch this video. So stay tuned. Make sure you share it with your friends and such. So let's get into it. All right. So I want to start with the keys to success. That's what this whole video is going to be based around. The keys to a successful trade of breakouts. So the first thing, a couple of issues you may have while you're running into a lot of false breakouts. One is your stop loss level. A lot of traders, especially when they're getting into it, they have this mindset where they don't want to lose money. In this game, you're going to have to lose money. And putting your stop loss in the right place is going to save you from getting caught in these losing trades, these quote unquote false breakouts. And this scenario is, you can even have a breakout that even wins, but it's just a little choppy. So make sure your stop loss level is good. Next, but we're going to dive a little deeper into that, like where to put it. Next is multiple signals to win. That's just setting yourself up to have multiple scenarios where the odds are in your favor. And we're going to dive deeper into that one as well. And then next is avoiding aggressive pressure. And last but not least, we're going to discuss timing your entry and fighting for the price. All right. So here's a couple examples we're going to look at. We're going to look at some daily charts. We're going to look at some 1 minute charts, just to get an idea of some examples of what type of scenarios we want to look for when we are determining a successful, a high probability breakout. So let's go look at some charts real quick. All right. So the first one we want to look at is AMD. AMD is a classic, clean breakout type chart. This thing has been going up over the past, I want to say, year and a half. I remember when this stock was like $2-3. This is back when I first started day trading. So if you want to look back at when this thing was $2, it's $116 now. But when it was $2, that's when I started my day trading career. But yeah, anyway, so this one right here is one of the key levels we're looking at. This is a potential breakout level. And for this one, I'm going to explain the stop loss level, why it's so critical to have a stop loss level in the right spot. So as you can see right here, you buy this, and then you can see from this candle here, you buy it on the breakout level, and this candle is just really choppy. It goes all the way down here. It goes all the way up to here. And it's just not what you want to see when you are buying a breakout. It's not a super clean candle. How it comes all the way down here. And if you had your stop loss too tight, let's say it was all the way up here, or you even had it like right here in this level, you're going to get stopped out. So you need to make sure that you have your stop loss around key levels behind what they say is furniture in the stock market. So furniture, I mean, you need to have it under some lows. You need to have it under some key, some previous resistance levels, previous support levels, some key trend lines, something like that. In this case, you would be okay putting it under the previous day low. I'm going to say that's like the go-to when you're buying breakouts. Just put it under the previous day low or under the 2-day low, and you should be fine. So in this scenario, you would be right here and you would be A-okay. You can also set it up where you have it under the previous like minor resistance level. So in this scenario, it will be this below this green candle here, or even lower. You want to get right here. And what that's going to do is it's going to make your stop loss a farther percentage away, but it's going to increase the likelihood that you win the trade and you avoid a choppy breakout. That is not a false breakout, but it's just a choppy breakout. because a lot of times people don't even realize, oh, it was a false breakout. No, it wasn't false. It was just choppy and you missed the move. And like with this scenario, if you got chopped out here, you would have missed, what is this, a 6-7 day green day of 26%. So just making sure your stop loss is wide enough where you can capture those large percentage of moves. So next, we're going to look at I think we were looking at the next one here. Let's open that up. Curve slide. All right, so the next one we're going to look at is the multiple signals to win. So this one is really important. This is not just for breakouts in general. This is very critical for all trading, but it's really important during breakouts just based on the nature of the breakout, because breakouts are breaking the status quo of the market. Most of the time, stocks want to trade in ranges, just stocks want to trade in consolidation patterns. So when it breaks out, it's breaking the normal bands that it likes to trade within. So when you set yourself with multiple signals to win, you want to make sure a lot of things are confirming that a breakout is going to take place. So the first thing I recommend looking at is the news. So let's pull up the chart where we look at Walmart, and I explain exactly what happened in Walmart. So let's pull that up now. All right. So looking at this chart, this Walmart has been sitting, has not been able to get above 151 for, I want to say, about a little over a year now. It's been trading within the low of 134 and then a high of 150. And as you can see, it finally broke out of that range and is now hitting all-time highs. So you identify your level where you want to get in, which is your breakout level, your high of day here. And you look to yourself, okay, what signals can I find that would support this given trade? So one signal I highly recommend is looking for a news catalyst, looking for positive news if you're trading this on the long side, or negative news if you're trading this on the short side. So in this scenario, Walmart, we're having a lot of inflation talk, which is good for Walmart because their goods are tied to inflation. As inflation goes up, their goods go up. And they also had a great earnings, which is great on top of that. So Walmart had a lot of news in their favor to push this thing through the old resistance that we're looking at here. On top of that, another signal to look at other than the news or the catalyst is look how the indicators are performing. So notice how this EMA here is really tight with the price. Look how tight that is, tagging the price, tagging the price, tagging the price. Gets a little here, but in general, when the breakout occurs, look how close that is. Look how close that is when it breaks out. That EMA is super close to the candle here, very close to the candle as it's breaking out of this level. That's what you want to see from your indicator when you're looking at your EMA. It's not too far away. It's really close. That means that the price isn't really aggressive and people are not just aggressively buying this thing. It's not just pure emotion that this thing is pushing up. And when you're buying it, when it's nice and tight to that EMA, it tends to work out in your favor where it will continue to push up. As you can see here, it was a successful trade and it's continuing to trend up in this direction. So that's the second thing to look for, your EMA. Make sure it's nice and tight, not overbought. And third thing, you want to also look at some indicators. This is really going to depend on your trading preference. I recommend studies, indicators like the RSI is a great one. The MACD is another great one. The DMI, the ADX are great indicators to look at to determine, okay, is this signaling to me that this is a good buying point, a good buying opportunity? So you want to marry those indicators, your news, and also the charting together as a whole to create a big picture and say, okay, with all these signals giving me the green light to go, my odds are in my favor that this is going to work out. So definitely use that when you are determining whether or not you want to buy a potential breakout. All right. So next we want to look at is avoiding aggressive pressure And I talked about a little bit about this when we were looking at the Walmart stock. You just want to make sure that you are avoiding situations and candlesticks where buyers are really aggressively buying a stock or sellers are really aggressively pushing a stock down, because this is going to lead to a scenario where it will push up and then it'll immediately snap down. And this is where you have your massive squeezes. You probably heard of this before, where you have your short squeezes or your long squeezes, and then all of a sudden it just snaps right back down. You want to avoid that, because those breakout levels tend to be magnet areas where traders, let's say you're taking a breakout that's going up. Short sellers are looking at those magnet areas to short. I know for me, I'm a short bias trader. Those are the levels I'm looking at to short, where the price aggressively shoots up. Buyers are super excited, and then they look like they're getting ready to hit the breakout level. Boom, they immediately get tanked on. So you want to avoid those aggressive pressures, because they lead to sudden drops in price once it gets to the breakout level. So I want to give you all an example now. And for this one, the best example I can give you is a stock I was trading yesterday. Let's pull up the chart. This is a stock I was trading yesterday. This is STSS. We're going to pull back all the way to yesterday. And here's an example here, just how aggressively. So this line right here is one of the key levels, the pre-market high. And just look how aggressive this candle is. Look how long the candle is. Look how far this thing went up 14% in a minute. Look how crazy that is. And notice how as soon as it shot up like that, it hit 362 and then dropped right back down another 10%. So that's what you want to avoid when you are trading breakouts, when they're getting to that level. Trading these aggressive moves tends to lead to scenarios where this thing will just immediately, boom, snap right back on you, because there's so much emotion in the play. So avoiding those can be really helpful. And like I said, with the Walmart, identifying where the EMA is in comparison to the candle is a good way to determine whether or not you should buy this thing. So look how far that is away from the candle. Look how far that is. This one right here it got nowhere near the EMA. It's such a distance away. And I know sometimes these things can be a judgment call with the EMA, but really once you see it enough, you just want to make sure they're close enough. The price is close enough to the EMA, and you can also use indicators to support your decision. So it's not just a pure judgment call. You want to look at this and say, okay, it's nice and tight. And then you also want to say, okay, it's not an overbought stock as well. Other indicators are not giving me red lights saying don't buy this thing. So marry them all together and avoid these aggressive plays where they're just shooting up, because they tend to lead to a lot of false breakouts. So be wary of that. And last but not least, I want to talk about the pricing. Price is going to be very important when you're buying breakouts. Really, price is important with any stock, any trade you get into. Price, you're fighting for price because you're fighting for where you can get in, where you can make your money, and that's key. So with this one, if you do want to trade these aggressive moves, this is something my mentor taught me. If you want to trade these breakouts, sometimes you really don't know what it's going to be outcome wise. You can have every signal set up, but you don't know exactly what's going to happen with the trade. So you can jump the gun on this trade, and this allows you to get a better risk to reward on your trade. So let's say you're looking at, let's go to the next chart here. Look at Netflix now. And we're going to look at the daily chart for Netflix. Give my example. All right. So with Netflix, as you can see, this is the previous all-time high that we were looking at on the breakout level. And This thing was curling around. It's pushing up. You can see the aggressive move here. It pauses, which is nice and healthy to see after the aggressive move. Let's say you say, okay, it's getting ready to break out. We have good news. We have our indicators signaling that a pending breakout is going to happen. But we want to get in a little early before the breakout happens. This is going to be really good because it gives you two options here. One, you can get in early to give yourself a better risk to reward. So let's say you get in right here at this level right here, and then you put your stop loss right here. It can be a little tighter than it can be a little tighter than you would be able to get if you were to buy it all the way up here. So that's one thing that's really helpful. Number two, when you get into these scenarios when everything is in your favor and then it just fails, it gets you. So let's say you buy it on this red candle. You buy it on this day, 11:15, you bought it. The next day, 11:16, you're in the money, you're looking good. Third day, it officially breaks out. It breaks out, hits $700, and then immediately comes back down. Day 4, you're like, it's not looking good anymore. This is looking a little rough. It's snapping down. We have a candlestick that looks really bearish, and then we have the second bearish candlestick as confirmation. And you're like, okay, this is pretty much done. What you can do at this point, you can immediately get out and take your small 1% profit, which is cool. You got in early, so it sets you up early, so you can. If you're winning, if you take these trades like this and you win 50% of them, 50% of them are going to be big winners. The other 50% are going to be terrible, where you're going to lose a small bit of money on these trades. So this is a really cool way of not avoiding false breakouts, but getting out where before they do any damage to your account. And this is one thing my mentor taught me. This is how he grew his account so fast. He was just trading these breakouts like this and getting out as soon as they immediately showed that they were false, but you were still able to capture a small chunk of change from them because you anticipated it before it occurred. So those are a couple of tips that you can use to avoid false breakouts and take advantage of the moves as they happen. If you have any questions about it, let me know down in the comment section down below and I can answer them for you. But that's going to wrap it up for the video. It's been your boy, Blessed Applesauce. Stay blessed. And I'm going to see y'all next time on Blessed to Invest.
Just to see tomorrow is a blessing. Stay prayed up is the message. Everything about a nigga blessed. Everything about a nigga blessed.